What's up everyone, welcome back to Earn It, Save It, Invest It. In this video I'm going to break down if the US and Iran war could cause a stock market crash, as well as what's going to go on with HIMS now that we're kind of going through the short squeeze. What should you expect HIMS stock to do over the next few weeks and the months, and kind of go over the business just a little bit on the new announcement with Novo. So if you can, please give me a like and subscribe. I'm going to make this kind of quick, so let's get into it. Will the US and Iran war cause a stock market crash? One of the things, the big, result of this war, as of what we know of right now, is oil prices, right? A lot it has to do with oil. So does the price of oil relate to the price of the stock market? And Google says the relationship between oil prices, and I'm going to go over the charts about how and it's actually kind of shocking. The relationship between oil prices and the stock market is complex and often inconsistent, showing weak overall correlation over long periods through specific sectors, and short-term market reactions can be significant. So basically saying no, they don't really correlate at all. Historically, the US stock market often experiences an immediate short-term dip following the news of a bombing or the start of a war, which has been now about a week, but typically recovers and even rallies in the following months. This pattern is called the war puzzle, suggests that markets fear uncertainty leading up to a conflict rather than the actual conflict itself, right? So we already know that we're in this war. The uncertainty is we don't know exactly why we're going through this, but we're in it. And so we know the price of oil. We know oil is going to be a problem. The biggest thing is we don't know when is it going to end, right? Because recently, right, this is March 9th, heaviest day of strikes yet on Iran, despite market bets that the war will end soon. The market actually has been going up now. This is kind of the summary. Trump predicts a quick end to hostilities. He's saying, oh, we're almost in the end. Tehran residents say overnight strikes are worst yet. IRGC threatens to halt Middle East oil exports, and crude oil prices fall. Stock markets rise after Trump remarks. So Trump said, hey, we're close to the end. All of a sudden, the price of oil goes way down. It went from 70s, 80s, all the way to 100, 115, and now it's all the way back into the 80s again. So what's going on, right? It's a little bit of confusion. Now it says here, the war in the Middle East, Iran vows retaliation for U.S.-Israeli strikes on residential areas. So Trump said it's getting better, but is it? We don't know. Second ship hit in Strait of Hormuz, crew evacuating. So now the second ship has been hit and the crew has to evacuate. It says Iran is ramping up. It launched its most intense and heaviest operation since the start of the war. Iranian drone hit a U.S. diplomatic facility in Iraq. Renewed strikes, right? Israel had begun an additional wave of strikes. And then a cargo vessel was on fire in the Strait of Hormuz. So again, they're saying that where the oil is going through, it's not going well right now. This was kind of big. The European Central Bank will move quickly and decisively if expensive fuel due to the Iran war feeds into durably higher Eurozone inflation. Basically saying if this oil at all has to do with inflation, the central bank's going to have to step in and do something. So now we have this war possibly actually having some economic effect on it, right? So I'm going to go over HIMS stock in a second, but what I want to show you is the price of oil and how it goes with the stock market. So I looked at some of the biggest oil spikes, right? Look at these spikes of oil, right? So I kind of went over them and said, okay, what did it do to the stock market? So from April 2003, somewhere around there, all the way to July of 2008, oil went up 455%. The S&P 500 SPY went up about 64%. This is, you have to remember, we actually started crashing right here. The stock market started crashing late 2007. So the market was already starting to crash, yet, S&P 500 was fine, right? 64%. So let's go, okay, after this. Now, as you can see, it's not like oil continued to go up with the crash, right? It crashed along with it. It then went down. Oil did go down 75%. It went down 75% along with the stock market. So oil up 215% after we kind of started to recover in 2009. Went up 215%. It went up from in the 30s all the way up to $112. The S&P 500 went up 54% during that time. Now you have to remember that is in a time frame of 840 days. It's what, from, let me see, January 2009 to mid, so it's a little over 2 years, and you have 54% on the S&P 500 basically. Those are pretty good numbers. As you can see right here, the price dipped pretty bad, but I'm going with how much price, the oil going up, right? The price of oil is not going to go down due to this war. It's going to go up. So I wanted to see, okay, when the price goes up, what happens? The oil went up 154%. SPY went up 56%. Again, and this is over a 2.5 year period. Now, if you remember, at the end of 2018, the market crashed, and so did oil. It's not like oil is the inverse of the stock market, right? Just because oil goes up, the market goes up. Then it kind of went recently from COVID, as you can see, just like everything else, it crashed. And so we went for about 2 years. Oil went up 974%. It went from $12 all the way to 120, basically 1,000. It went 10x almost, right? I mean, as you can see, it actually went really low, but whatever. All the way up to that, right? So they went up about 900%. The S&P 500 went up 70%. So, where are we now, right? This is where we can start adding those question marks. Well, what's going to happen now, right? Well, what's going to happen here? The stock, or the oil could go up 90%, let's say. It goes up 100%. It goes up to 115 eventually. That doesn't mean the stock market's going to go down. Clearly, it doesn't mean the stock market's going to go down. Look at that. Right? So that's that, right? That's the stock market, or that's the oil and yes, there's going to be other things going on with the war that could have some results, right? But at the end of the day, long term, when we're looking years in advance, really the price of the oil is not going to really affect the stock market. One thing I actually do want to show you though, really quickly, is the time periods between 10% or more. Is it on this one? Oh no, is it on the Qs? Right here. So if you look at this, this is the QQQ. We are now at around 258, 259 days of having in between 10% drops in the market. Oh, you can't see it very well, right? We have 258 days. Oh wow, none of these you can see. Let's go to 40. Boom. We are at 250 something, right? 260 days basically. That is the most since 2018. We are due for a 10% drop. Now we're currently at about 5%, I think, from the top, from our all-time highs, but we're still due for a 10% drop, right? Now look at this. These are all the days in between 10% drops, right? These triangles, this first one always represents the first 10 or more percent. Then this first one is its recovery, and then this is how long it took from the drop to the pop, and then it, back to even. Well, the days in between the 10% drops, we have 258, 83, 259, 168, 60, 79, 132, 91, 427. The 427 happened in 2016 to 2018. We had 427 days where we did not have a 10% drop. That's the longest we haven't had anything. Now it's been 259 days. What's crazy is that it's now 259 days. We had a 10% drop. Then we had 83 days, 10%. Now we're back at 258. That's 2 times. Before that, we only had 91, 132, 79, 60, 168. We didn't even hit 200. We didn't even hit 170. And now we're at 260 twice. I'm not predicting a crazy crash or anything like that. What I am trying to say, though, is that we are due. We are due for a correction. We are due. That's just, there's nothing else to say. We're about 4.5%, almost 6% when we opened, but now we're about 4% or something around there. This is what, this week? Yeah, for this week. So we still haven't hit that 10%. And that's the one thing that does kind of worry me about the market is I think maybe this war could cause the market to push down to that 10% range, form a triangle, and then we kind of can run from there. That's just my opinion, again, about the oil and all that, how it can affect the stock market. Now let's move on to HIM stock. As you know, the lemon squeeze, right? The shorts have been squeezed out of their positions a little bit. So HIM stock went up about 40%. As you can see, it's went up another 5-6% today. Down 1% after hours, but as you can see, 40% since that whole deal with Novo. Again, the biggest reason, it's been shorted so heavily. About 40% of it is shorted. So it says usually, typically, when there's 40% shorted and you see a big news catalyst, you could see an explosive and erratic price action. Expect rapid near vertical upward moves, which is basically that 40% just straight up. But it also says you will likely see massive intraday swings, possibly from 20 to 50% in a single session, which we had that 40% already. And then obviously the trading volume is going to go up. A lot more traders are going to be doing it, and that's going to be kind of the fuel, right? A lot of people are involved in it. But the squeeze typically reaches sharp peak between 2 and 5 trading sessions. So once all the shorts are like, okay, you know what, we got to get out of here, they've already covered, then it says you can expect a rapid crash or a mean reversion. 73% of the stocks return to the near pre-squeeze levels within 90 days. Now, HIMS, I don't believe is exactly going to do that. I believe it's been pushed down so hard that this squeeze is just kind of getting it back to like, okay, now here we start from the ground. It could possibly hit 19, I think. But I'm not sure about that, so I am still picking up shares right now. But I do believe it can hit 19 at some point if this squeeze does not push it into the 30s. If it remains into the 20s, I believe over the next month it could go back into the 19s maybe, and then after that continue to go up because a lot of people are getting in right now. So you might have kind of a where people don't want to be a part of it, right? This really doesn't have anything to do with it. They have a lot of available stock. But one thing about the business that they made the Novo deal with, right? I'm going to show you something about it. It was a little interesting. It says, Hims & Hers today announced a collaboration with Novo Nordisk. The company now plans to provide GLP-1 customers with access to broad assortment of FDA-approved medications and offer compounded semaglutide through the platform on a limited scale. Now this is, just keep this right here, limited scale. That's kind of important. I'm going to show you why for a second. As a part of this shift, the company will no longer advertise compounded GLP-1 offerings on its platform or in its marketing, and existing patients will have the opportunity to transition to FDA-approved medicines when determined clinically appropriate by their providers. A limited set of customers whose clinical needs cannot be met using the increasingly varied set of commercially available FDA-approved GLP-1s, Hims & Hers plans to offer access to compounded GLP-1s if the provider determines that a compounded product is clinically necessary. Essentially, they are going to back away from compounding a little bit. Now, it's interesting. I wonder why they're doing that. The fact that they're saying they're not even going to advertise it anymore is weird. That's the one concerning part. I mean, they're all about personalization, but it is just also a weight loss. So there's so many other medications that they're going to be compounding. This is just one of the drugs that they were compounding, and to me, what this says is Hims and Hers was doing things illegally or legally through a loophole, right? Hims was giving their customers GLP-1, compounded GLP-1 injections based on a valid prescription. Valid, right? Because they say, hey, I have this, right? And it was like, okay, look, they're doing it because they're getting a prescription from this valid provider and all that stuff. But at the end of the day, these people don't really need compounded GLP-1. They could just go with the regular, most of them. But this was Hims and Hers way of getting around doing it with Novo, selling Novo's Wegovy, right? So I think Hims and Hers did find the legal way to sell GLP-1. Novo did not like it, and so they went against them. They eventually said, look, you were doing it legally. We didn't like it because it just is such a skirt around, because we don't want to do it. We didn't do a deal with each other, but you're still able to do it legally. Let's just squash this. We'll let you sell ours, but you can't do it that way as much anymore, right? You have to go through us more. If you want to sell this drug without having to do this little workaround, you're going to do it through us. And so the margins are going to be a little bit lower, right? You can expect the GLP-1 margins to be lower, but I do hope that this helps with their subscriptions, because their subscriptions was moving up forward, but it wasn't moving up as fast as it was in the previous quarters and years. And so if their subscriptions start to go up more, because then they can advertise Wegovy, we sell Wegovy, we can provide you with Wegovy, right? And then they have all these other things. I do believe Hims and Hers that will help get some people into the ecosystem more. So that's the good thing, but that was a little, interesting to see how much it seems like they will be limiting. I mean, they straight up said they're not even going to advertise the compounded GLP-1s. They're not even going to put it on the website anymore. It's just straight Wegovy, right? What that is. Now, you have the option, but they're not even going to advertise that. So that's probably one of the concessions they had to give to Novo, right? It was like, okay, yeah, we won't advertise compounded. We'll still offer it if people need it, people want it, but we're going to offer yours first. So margins go down a little bit, but hopefully subscriptions go up. Hopefully they can charge more per month. And like I said, if they're getting more customers and they're able to charge them more, like, boost it to $90 a month revenue per user, right? And then they get like 2.5 million to 2.7 million. I mean, that's, right? And that they would be making about $2.7 billion to $2.9 billion. So yeah, anyway, that's just my 2 cents really quick on Hims. I do expect the stock, like I said, to kind of go up and down in the 20s, possibly hit the 30s, or possibly hit 19. I think it's going to bounce around a lot. By the end of the year, I think it'll be in the 40s to 50s. I think it'll be back to the 40s and 50s by the end of the year. I just think the next couple months might be crazy, on top of, from the short squeeze and all of that stuff, and then they're going to have to come out with the earnings. So then we're going to have to figure out, okay, how does this change the earnings? And then, of course, we have the war, which could put a damper on the squeeze that, people, all the shorts might be covering, but people might not be wanting to buy in as much because people might just be a little hesitant right now. That's just, but yeah, anyway, that's all I got to say. Please give a like and subscribe. I really appreciate everyone who's watching. Hope all of your investments are going well, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.